Good afternoon. I'm Frank Forte, Managing Partner and Chief Investment Officer of Lucern Capital Partners. Today's lunch with Lucern is going to be shedding light on hot topics in private real estate investing. So before we get started, most of what we've done here historically at Lucern Capital Partners has been multifamily oriented. For those of you who've been with us for some time, either as investors or prospective investors, perhaps new investors, as time goes on, things shift in the real estate market, right? And part of being a good investor, a good fiduciary of capital on behalf of investors is identifying opportunities where value exists and where you can make substantial returns that are above market. In this environment, multifamily, the space we've been in for a long time, it's begun to get challenged, right? Interest rates have come quite a bit. While you can't really procure properties at a level that's significant enough to make those investments make sense, right? So over the last year or so, quietly we've begun to delve into flex industrial, some neighborhood retail, other products that are differentiated from multifamily, where there is a spread that exists right between where you're purchasing the property and debt that allows you to buy with what's known as positive leverage and go in, make improvements, improve the property, and generate cash flow and upside. So one of those products we're going to talk about today is it's called flex industrial. And what flex industrial means is it's a subset of industrial that it really comprises office, right, or a little bit of retail with larger warehouse space. Most people, when they hear office in today's environment, their heads are going to explode, right? It's not the type of office you think about as a suburban office building or high rise. This is really a business park, is really the best way to describe it, where you have a wide variety of tenant uses, and maybe they have a little space that faces a outward-facing retail or wholesale client, and then most of it's kind of industrial in the back, right? So there's a little space in the front for folks to work and conduct business, and then the warehouse where most of the packing and sorting, e-commerce, production, whatever it may be, depending on the tenant use, gets completed. So leases here are generally shorter, provide for a wide variety of uses, right? So there's a quick kind of graph on demand for industrial real estate, and this is broad-based industrial, to be clear, but flex product is usually mirrors this or is even tighter in terms of vacancy. So last couple of years, if you followed any of this, demand for industrial has been really high in America, right? 2022 was the second highest absorption at almost 500 million square feet, right? So a very significant portion of that. The South and Southeast, where we invest, represent about half of that. That's due to a lot of the in-migration patterns, a lot of the really positive stuff that is going on that we talk about regularly, right? Is part of the reason to invest with us in these target markets. Flex warehouse, it's really great from a scarcity play, right? You've heard us talk about workforce housing in the past. I kind of liken flex warehouse to almost the workforce housing, right, of industrial. You're not building any more of it. It's very difficult to build because it's very difficult to find infill land, and construction costs are expensive. It's continuously getting raised and scraped to make room for other higher, uses, new construction, multifamily, for instance, and luxury housing, maybe really big. It's on a bomber kind of industrial. When you drive on the highway and you can pass a property for 30 seconds going at highway speed, right? It's 2 million square feet. Amazon, a Jet, a Walmart, someone like that all occupy that space, right? So flex is increasingly getting demoed and removed for higher quantity uses. And then, it's in high demand. Your plumbers, your electricians, your HVAC guy, your welder, your guy doing cartons, your mechanic, appliance repair. I don't know if I said that already. What are some other uses? Signage companies. We have a tenant in one of our properties that does balloons, right? Custom balloons for kids' parties, and needs to store all the stuff. So it's all this patchwork stuff that kind of drives the economy. It's a lot of small business. So it's a really nice kind of rewarding feeling helping that sector of the economy, but it's diversified. It's very small spaces, so they're relatable easily and quickly. The use cases are very wide, so you're not trying to get some tenant to occupy a very specialized piece of space. So flex is, for a lot of reasons, increasingly less covered in the economy today for those reasons, and it's in as high of a demand as. All right, so kind of some benefits, some quick benefits of investing in flex, which we discussed a little bit of this. Benefit one, diverse tenant base, right? Multi-tenant flex industrial obviously tracks a wide variety of tenants. If I sat here, I could probably name 20 or 30 types of tenants, and that wouldn't even begin to describe the service. It's flexible, it's adaptable, right? So it typically offers a combination of office, some showroom, warehouse areas. We have a deal under contract right now. We're actively raising money for, pretty close to finishing out that raise. We're going to have a webinar the next day or so on that, and that is a tenant base. I'll give you an example of a tenant showroom there. There is a gentleman who sells all wholesale flooring, right? So he has a little bit of office and a little showroom in the front, the different types of flooring he sells, but then probably 80% of his space is warehouse for storage and e-commerce to deliver. But when he has wholesale clients come in and builders and developers who want to see the product, he has it there, has some office space to conduct business, right? So it's flexible, it's adaptable. Similarly, next door, you have a person who does window tints, right? Their entire space is warehouse space. Cars drive in, they do high-end window tinting and ceramic detailing on cars and custom wheel repair. They have no office space, right? They come in and their big kind of area is where they do all this work. And then similarly, 2 doors down from that, there's a plumbing supply place for wholesale and individual retail plumbing and HVAC supply, where they have probably half of it is technically retail, right, so to speak, where they have all these different kind of aisles and buckets for various plumbing flanges and flashing and so on and so forth. And then the other half is where they distribute. So, we just went through 3 examples of different gradations of office and showroom and warehouse. Strong demand, right? Demand has been increasing for the reasons we discussed earlier in the presentation. Not a lot of the space, a lot of it is going away. Companies are requiring adaptable space for today's environment and to be able to accommodate a wide variety of uses. Mitigated vacancy risk. Multi-tenant flex, it's lower vacancy risk compared to a single tenant property, or a single tenant property, 40, 50,000 square feet. Property I was discussing before, it's 55,000 square feet. Imagine if that was one tenant, right? Tenant goes out, you're in trouble, right? And you have to go out and re-tenant it. And the market for industrial is strong, but it could be 3, 6, 8 months, 9 months before someone comes into that space who fits that criteria for that exact building and is willing to tenant it and come in, and there's concessions and all the stuff that you have to do to get those folks in to then come in and sign a long-term lease. In a property like we're discussing, the average unit size might be a couple thousand square feet. And if any of those people we discussed come rent the space, this property in particular, there's a forward-facing piece to the road. There's a gym there. There's a chiropractor. There's a mortgage broker. Those are not people you would think that traditionally rent a space like this, but it's a wide variety of uses, right? And it's zoned appropriately, so it makes re-tenanting really easy and mitigates vacancy risk. And lastly, it's cash flow stability, right? You have this wide variety of tenants, and absent some gargantuan economic downturn that crushes everyone, these tenants are generally pretty resilient. They're service businesses, they're need-based businesses. These aren't discretionary things like a high-end restaurant, right? Where if there's an economic downturn, they're going to see a lower turnout for people coming to frequent their place. Therefore, their cash flow is going to be compressed, and they might be at risk. You're not going to see that here. So all in all, I want to thank you guys for this quick lunch with Lucern. Idea with lunch with Lucern, by the way, is that it's a quick little snippet on some stuff we're working on, little education piece to watch it while you're sitting at your desk eating lunch or watching from your phone or wherever you might be. It's not long, it's not lengthy, it's just an opportunity to get a little snippet of what we're doing and why. I'd encourage you to reach out. My email and phone numbers below. Alternatively, my partner, David Hansel, his email is david.hansel@lucerncapital.com. He handles our investor relations. If you have any interest in what we're doing here, you're an accredited investor and you want to participate, I'd encourage you to reach out. And thank you for the time today.